Hi, I'm Lauren Taylor, Managing Director of Active Property Group, and today I'd like to discuss whether or not it makes sense to invest in property in a high interest rate environment, and more importantly, if it's still possible to make a profit investing in property at a time when the RBA has been increasing interest rates month after month. If you're looking for investment opportunities but are on the fence about the property market right now, then this video is for you. Okay, so according to a report released by the comparison website Mozo, 31% of borrowers are now in financial distress, while 14% of borrowers are under extreme financial distress, unable to pay for their mortgage. The consecutive interest rate hikes by the RBA have ballooned mortgage obligations, catching many home buyers and property investors off guard. Given the current economic climate, there is no guarantee as to when the RBA will decide to scale back on its interest rate hikes, or if property prices will continue to drop. For property investors or for anyone looking to buy property, the question is it still a good idea to invest in property in a high interest rate environment? So let's take a look at the challenges of investing in property. One of the biggest barriers to entry when buying an investment property is saving the 20% deposit. Sure, there are banks that will offer 90% to even 100% finance, but the monthly obligations is where it will cost you. Research conducted by the comparison website Finder has found that from April 2022 to September 2022, monthly mortgage payments have ballooned by 29%, with the estimated average annual mortgage payment at around $9,600. This raises two issues. The first being that you'll need to prove to the bank that you can afford to make the monthly payments and cover any future interest rate rises, which may prove difficult. Secondly, if you're buying an investment property with such high interest rates, are you going to be able to charge enough rent to cover the costs and make your purchase profitable? With the high cost of entry and uncertainty in the real estate market in the foreseeable future, investing in property in the traditional way can feel quite daunting. But what if there was another way to benefit from investing in property without having to deal with the common challenges traditional property investors face? Most people don't realize that there are alternative investments out there that let you invest in property without having to actually buy property. An example of this is pooled mortgage funds. So, what is a pooled mortgage fund? As the name suggests, pooled mortgage funds pool money from investors and lend it out to borrowers who secure the loan with a mortgage. The fund is managed by a professional fund manager who makes the lending decisions. In many cases, pooled mortgage funds are used to finance business or development loans, all of which are secured by Australian real estate. Hence, investing in a pooled fund is sometimes likened to investing in a diversified property portfolio. Investors receive distributions made up of the interest paid by the borrowers. Distributions are paid either quarterly or monthly, depending on the terms of the pooled mortgage fund. Therefore, investors in a pooled mortgage fund are able to earn passive income without having to manage anything because the fund manager is already doing all the work for them. It's for this reason that pooled mortgage funds are among the investments that deliver a passive income. When an investor is considering investing in a mortgage fund, one of the first questions they ask is, what if a borrower defaults? And how safe is my investment? Thankfully, pooled mortgage funds that are managed by experienced fund managers have safeguards to minimize the risk of the investment. The first safeguard is that a pooled fund is spread across multiple loans. If one or two borrowers default, the fund is still earning interest from the other borrowers that are paying back their loans. The likelihood of all borrowers defaulting is very small, which is why pooled funds have become an increasingly popular option for passive income. The next safeguard is in the LVR, or loan to value ratio. Loans financed by pooled mortgage funds are secured, typically by Australian real estate. LVR simply refers to the ratio of money loaned out compared to the value of the security property. At Active Property Group, the maximum allowable LVR is 75%. This means that the value of the loan we provide to a borrower is 75% of the value of the property used to secure the loan. And usually the LVR is a lot less than the maximum of 75%. Therefore, if the borrower defaults, we can take possession of the property and sell it to recover the funds, which are then returned to the investors. So what are the benefits of investing in a pooled mortgage fund when compared to purchasing an investment property? Well, the barrier to entry is much lower than the 20% deposit required for an investment property. At Active Property Group, the minimum investment amount for retail investors is only $10,000. Moreover, pooled mortgage funds are set and forget investments. There is a fund manager that will oversee your investment for you, so you won't have to manage a property, pay for maintenance, search for qualified tenants, and then manage tenants once they move in. You also won't have to worry about marketing your property should you face a vacancy. Perhaps the biggest benefit for an investor is that you get the chance to earn regular distributions. Many traditional property investments are negatively geared in order to earn tax breaks, which may be beneficial to some people. However, others are interested in creating passive income, which is where mortgage funds are ideal. At APG, we also have the option of reinvesting your quarterly distributions so you can compound the interest. This is the type of investment where you can benefit from investing in property without actually having to take on all the challenges that come with investment properties. If this type of investment interests you and you would like to find out more information, be sure to like and subscribe to Active Property Group. Hit the bell notification icon so you never miss new content. To find out more about APG's Pooled Mortgage Fund or our direct investment offering, simply click on the link in the description. See you next time.